My name is Sally Gimmon, and I'm the owner of the TrustIsYou.com. Also with a podcast called Stop Paying Capital Gains Now. There, in the middle of the pictures. The reason I do this is because so few people have ever heard of the Spendthrift Trust. With the Spendthrift Trust, it's legal, patented in the IRS Tax Code 643B, like Bravo. I want to teach as many people how they can save federal taxes, just like I do with all my real estate and with my businesses. Because if I know how to do it, you should know how to do it too. This trust comes from England way back when King Henry VIII started the Church of England. He got in trouble for chopping off his head's wife, started the Church of England, and he went to go tax the lords and ladies, and they went back to the Magna Carta saying, no, King Henry, you can't do this. It came over to the United States when we were still a colony, and the law firm I work on behalf of has a trust that's turning 350 years old in 2023. They inherited it from another law firm that shut down. So this trust has been around for over 350 years. It's been in front of the U.S. Supreme Court twice. Why you should know about this trust? It's going to save you in three ways. You're going to save federal taxes. Who doesn't want to save federal taxes? You're going to keep your information 100% private. Your LLC, S Corp, or C Corp does not do that. And you're going to not pay any judgments if you get sued. I can't stop you from being sued, but you won't pay any judgments if you get sued. Now, I do want to talk about four trusts very quickly so you will know exactly what's happening there. The first trust is the business trust, and it's for 1099 income earners. When you have the business trust, you will save at least 70% on your federal taxes year after year after year after year. So to give you an example, my little cheat sheet, hey, match my cheat sheet and my dress. Sorry, I'm being obnoxious. So she's a real estate agent. In 2022, she made $70,000, and she's at 22% tax rate. With the Spendthrift Trust in 2022, she would have paid $10,707.50. With the Spendthrift Trust, she's going to save over $7,495 this year. The reason why she's looking at the Spendthrift Trust is because she has 4 houses on the market in the Charlotte area right now, and she wants to save federal taxes. Here's my one that I really do like. I just did a post. I just started a new Facebook page, TrustIsYou.com. So if you're on Facebook, please like and follow my new Facebook page. But this is a gentleman, husband and wife in upstate New York. He's an affiliate marketer, and in 2021, his wife got her real estate license. She hadn't sold or bought anything yet, but we used our 2021 numbers. So in 2021, he's an affiliate marketer. He has over 600 people below him. He sells weight loss supplements everywhere. He's in 8 different countries. His 2021 taxes were $128,589. We're going to save him $90,112.30 with the Spendthrift Trust. He's in the state of New York, and then he's also going to save $15,000. He's going to also save 10.3% on his federal taxes. Altogether, when you put the savings in federal taxes, the savings in state taxes, he's going to save $123,165.10, almost as much as he pays in federal taxes. That is the Business Spendthrift Trust. You will save at least 70% on your federal taxes. Now, the Beneficial Trust. This is for investors. I don't care if you're a passive investor, if you're a real estate investor, a crypto investor, a crypto miner, a crypto doing stock market investing, options trading, you have royalties, you do NFTs, you have mineral rights, or you're a forex investor. You're going to save the following taxes year after year, generation after generation. You're no longer going to pay short-term capital gains or long-term capital gains. I just made a post on my new Facebook page about a fix and flipper who makes $50,000 on each flip. He's at 24% files jointly with his wife. And that would be $12,000 in short-term capital gains. When I just helped someone sell a family restaurant, what happens when you sell a restaurant? You're going to have either 15% or 20%. You're going to take out what you originally paid for it, and then what you're selling it for, and then that's what they're going to tax it on. At 15%, we saved him $450,000 April 15th, 2024. At 20%, we saved him $600,000 next year when he has to pay his taxes. His wife called me in happy tears going, that changes our retirement. 6 figures to change their retirement. I don't know the TV show, but she says there's some guy named Dave at Lottery Dream House. They're moving to Florida. They want a 2-bedroom, 2-bath house, and they're going to contact him. And it's got to be between $460,000 to $600,000. Good for them. They're so happy. Their son saw me here on TikTok and showed the dad the video. That's a long-term capital gains. Interest income. This is if you're a passive investor, if you're a forex investor, if you're doing the BRRRR strategy, or if you have notes like I do. I have 12 notes where I'm the paper on the house. People pay me the interest for it. A true client, he, for 3 years in a row, went to his accountant saying, I'm paying too much in interest income. 3 years in a row, his accountant told him, stop buying so many houses. He has 85 BRRRR strategy houses where he is buy, rehab, redo, resell, repeat. I don't know what all the R's stand for. His friend told him about the trust. We saved him and his wife $135,000 in 2022. He now has 95 BRRRR houses in Texas, and he's doing commercial real estate there. Forex investors, you're going to be charged twice, interest income and capital gains. You need the Spendthrift Trust. Dividend income, if you have stock certificates, if you're investing in the stock market, or if you're doing options trading, you're going to save dividend income. If you're an options trader, listen up, you're going to pay 40% for a year or less on profits, or 60% for a year or more on profits. My sister-in-law, a year on profits. So you're going to save that. And then rental income. I know. People with rental income can take depreciation, but you still need to know about the Spendthrift Trust. I don't care if you have a business trust, a beneficial trust, a charitable trust, or a senior trust. You're not going to pay any judgments if you get sued. So if your renter's dog gets out and bites somebody, they will come after you because you've got more money. That will just disappear for you. And then finally, royalties. Maybe you're an author, an actress, a songwriter. Maybe you have NFT crypto, NFT real estate, NFT artwork. Or if you have mineral rights. One of my clients inherited his granddad's horse farm, and he's got 6 oil wells on it. You're going to save those taxes year after year after year. A charitable trust. This is the third trust I want to talk about. A charitable trust is for nonprofit companies. The charitable trust, it will help 501(c) people get grants and never have to pay them back. And then finally, the senior trust. This coming October 2023, the federal government is going to be looking at all 1040 tax returns from 2021. If you have made more than $91,000 from Social Security, from pensions, from wages, from 401k withdrawals or SEP withdrawals, from capital gains, interest income, dividend income, rental income, or royalties, you could be paying more than $166 a month the average American is paying for Part B of their Social Security. Part B is your doctors and your medical tests. If you made more than $150,000, woo, you're going to have to start paying the federal government. All the trust, the business trust, the beneficial trust, the charitable trust, or the senior trust will file a 1041 tax return. This is a special tax return, and when the IRS goes back to look at everybody on Social Security in 2021, they won't be looking at 1041 tax returns. I don't care what trust you get, you can start saving thousands and thousands and thousands of dollars. My name is Sally Gimmon. I am the owner of thetrustisyou.com. I also have the podcast, Stop Paying Capital Gains Now, with an exclamation mark. If you go out to my website, thetrustisyou.com, I have a free 18-minute video I will email to you that goes over my slide deck so you can learn about the trust as much as you like. Again, I personally have saved federal taxes. I want to teach everybody else to save federal taxes. 97% of the trusts out there are what's called a family trust. My mom and my dad had this. They signed up for the trust. They were a grantor. And when they pass away, the trust dissolves. This is what Susie Orman talks about on TV, PBS television. This is not your mom and dad's trust. This is the same trust the Rockefellers, the DuPonts, the Kennedys, and U.S. presidents have. You're going to save federal taxes, keep your information private, and you'll pay no judgments if you get sued. Again, please reach out to me. My website, thetrustisyou.com. I'm going to do a major speech on September 14th. I'll be posting this on TikTok so people will have this. So please, if you want to save taxes, reach out to me because so few people have ever heard of this. If your CPA tells you I'm lying to them, I've had many CPAs say this. There is a book out there I want y'all to know about. It's called the Scott and Asher, A-S-C-H-E-R, Scott and Asher on Trust, 5th edition. This is the textbook trust attorneys study in law school. I also have 2 pages of case law I will email to you if your CPA or your financial advisor is saying I'm lying to you. This is as legal can be. If the Rockefellers, the DuPonts, the Kennedys, and U.S. presidents can have this trust, why can't you have this trust? Thank you for watching me today. I hope I taught you something new. Please reach out to me if I can help you save taxes. Take care. Have a beautiful day.